Okay, welcome back. GE shares, they've rallied to start 2019, and William Blair thinks that momentum will continue. We've made it our call of the day. You see it up 19% year to date. They say the end of apocalypse scenarios now at hand. Interesting. What do you think of this call? No ownership on the desk, which speaks volumes about how this thing was viewed and perceived for the last many months.
I was a put owner for a very long time.
Okay, I know you were, because you were looking at single digits. You got your single digits. Has the tide turned? Is now the time to finally get in?
Well, I think it might be a little early to make that call. I understand, obviously, why this particular gentleman, the analyst, wants to make this call, because it could be him saying, hey...
Long-time bull, too. It's not like...
Right. Which almost concerns you a little bit more, because maybe he's reading into this too well, because he's talking about all these various sales and how... The problem sometimes, I think, Scott, is when you're trying to sell these businesses, when everybody knows you're trying to sell them, who has the upper hand, right? I mean, I think that's something that has to be understood as well. So is this the bottom? I don't know. Tusa did talk about, hey, look, he saw that range of 6 to 9. So here
you don't think you're not even sure whether the bottom is
100% in. Well, Tusa talked about the 6 to 9 range of where he thinks this stock would be. Price target was still 6. So it's one of those things where it's interesting. It's interesting to see, and you can understand why the bulls are coming out.
Well, but this morning Kramer said he thinks the run continues. So there's enough of fundamental story here that makes the stock worth a hell of a lot more than, not a hell of a lot more. Those are my words, not Jim's. But 8 or whatever it's trading at right at this very moment.
I have two things that I think are hard to own this stock right now. One is given the relative valuation of the overall market. There are plenty of other opportunities out there that you can own other than buying a really distressed GE. The other thing that worries me, and to the top of the show, is you get another pullback in the markets and the credit markets actually start cracking. GE is so dependent on the credit markets right now, not just for their own businesses, but to actually sell some of the stuff they have. You're going to be put in a bind, and I think at that point the equity holder is going to get pushed
Yeah, but
back.
You're telling me, though, I mean, then you wouldn't touch this thing no matter what.
Not yet, no.
Here's one reason.
Then when? But tell me then when. I mean, you're worried about the market pulling back and then these credit risks showing up in GE more acutely than maybe some other places. You tell me when then. When would you get in?
I'm not sure, because I think the opportunity cost of my dollar elsewhere is much better than it is with GE. If we're at the top of the market and the market's trading at 18 times earnings and I think here's value, then maybe I start looking even more seriously at GE. But at 15 times and this thing trading at 12 times, there's a lot of stocks that I think are cheaper than GE that have a lot more transparency.
Lawrence Culp has a great reputation. You've got to give him credit for what he did today, going in, hiring Steve Winokur, the UBS analyst that actually covers GE, brings him in as VP of Investor Relations. So, listen, Lawrence Culp is a fighter, but the problem here is the pension liabilities. You've now had 7 to 8 years of significant equity gains, but still as a country, we have pension liabilities in excess of $5 trillion. So that's one of the biggest problems for GE. I'm not sure how they're going to fix that.
Here's what happened. December 19th, they traded nearly 250 million shares, Judge. I mean, that's a washout. When we traded down 2.7 through 7,
right.
We traded down to 6 on the 20th and the 21st, not $6 even, but, slammed all the way down into a 6 handle. The turnover was about 1 billion shares on those 3 days, pretty close to it. Now, that is so far out of the norm that you've got to look at that, and that's perhaps what some of the analysts and perhaps some of the folks who have risk capital are saying. Maybe that was the washout when we were down around 7. So if they set that as the level, and now we're here at 780, 790, wherever we are right now, and they say, you know what, I think, this is a good area, I can't blame them for putting some risk capital in.
So what about this other call? We're calling it our honorable mention for call of the day, and it's for obvious reasons. Western Dig. You guys see this stock today? Take a look at the chart, because it's ugly. That stock's down, there you go, 6%, and that's not even as bad as it was earlier.
No.
You got a downgrade to a sell. Evercore, they're looking at one more reset coming perhaps for some of these stocks. You've had a nice comeback, but maybe it's going to be short-lived. What do you think?
Well, they also, when China came back with what they put out over the weekend about growth there and lack thereof, that hurt anybody in really the tech space here, Scott. From Western Dig, Apple, Micron Tech, a lot of those that had just been given upgrades recently as well. So the softness today, not surprised. Evercore's got a lot of respect, too, for folks on the tech side that listening to what their analysts have to say.
So they go, Pete, they say their top picks for 19, okay, for chips. NVIDIA, Xilinx, ASML, Marvell, and Micron. However, they even couch that. They'd look to add positions in what they look at a final reset, what they call between February and May.
Yeah. Well,
so maybe it's too early to buy any of these chips.
It might be a little bit early, especially if Mike Wilson is right in terms of do we got another test towards those lows? And if so, I would think the technology and particularly the semis would be part of that slide to the downside. So there's probably still left some great opportunities. Now, NVIDIA is one of those names that we brought up a couple weeks ago. Everybody seemed to love it at 280, 85 or wherever it was and trading at a multiple that was absolutely ridiculous. And then down towards 130, everybody kind of went absent. So I think if you're looking for something that's going to have beta and now you can look at a PE level that's reasonable, Scott, I think NVIDIA is one of those names that I'd be watching very closely.
I agree with you. I mean, we own it. I own it personally, and I think, and I'd owned it all the way up, wrote it back down. I'm buying it for new clients, buying in new positions because it's got secular growth.
Yeah.
NVIDIA is not what we would call a commodity semiconductor. A lot of these are commodity semiconductors that go down with the market. NVIDIA's got an issue for the next couple of quarters. They have an inventory overhang. Once that gets burned through, the market will see that grow, and they've got great trajectory in data centers, in AI, in gaming. I think that's the area you want to be in. They have pricing power, but you'll get through this, and it's really got a reasonable multiple for the growth rate you're going to get.
All right. Good stuff.